Hi, everyone. This is Kristen. Going to give it another minute and let people log on, and then we'll be starting.
Hi, this is Daniel.
Okay, we're going to get started. Welcome, everybody. My name's Kristen. I'm the manager of training here at Penny. This is something new we're trying out, monthly webinars. We're hoping it gives you a little bit of insight into some of our features. This month's topic is estimates. So we're going to be covering the basic functionality and some of the additional extra features that go along with it. As there are a lot of people dialing in for this webinar, all the participants will be muted, so just be aware of that. If you have questions during or afterwards, we ask that you email them to us at our CRC email, crc@pennyatworks.com. At the end of the session, I'm going to take a couple of those questions and answer them. If I don't get to your question today, I will follow up with you personally later this afternoon. So again, any questions, just shoot them over to crc@pennyatworks, and then we can cover those. So the topic today is estimates. Now, pretty much everybody has to do estimates. They're required, and the thing that drives us all crazy is estimates, they need to be fast, and they need to be accurate. We all know the situation where the fund managers say, I want to know what I'm doing, I want to know my performance, I want it today, I want it right now, and they want it as accurate as possible. And if it's off a couple basis points, you're going to hear about it later. So one of the beauties of Penny is it contains estimate functionality. And what that does is when you run an estimate in Penny, it actually performs all of the operations that a regular end-of-period processing does, but rather than affecting the actual investor record as a real close, it saves it to separate tables. So all the functionality that's included on a real close in Penny is available through the estimate. So we're going to start off just taking a look at the single period estimates. Estimates are found in the Fund tab. Under period, there's a folder specific to estimates. As you see, there's a couple different types. We're going to go through all of them. We're going to start with the single period. Now, anytime you do an estimate, you always need a starting point. You need a base from which to work off of. So anytime you do an estimate, you're going to need your beginning capital processed. So for this fund I'm working on, for an example, I have a fund called Estimate, and you can see my April 1st capital has been processed. Penny always needs, for an example, real numbers to base the estimate off of. So once you have the beginning period processed, you can run an estimate. When you click Add, the estimate screen appears. You choose your fund. The starting date is going to be the starting date when you process your opening capital. So in this case, April 1st. Your ending date can be whatever you choose. So if you're running a daily estimate, you can do 4/1 to 4/1. In this case, I just have a mid-month estimate of 4/15. You can run a month-end estimate of 4/30. Even if your period is set up as monthly, With an estimate, your ending date can be whatever you need it to be. Penny does performance on estimates. This is something you can select here, whether when it processes the estimate, if it calculates performance, simple yes or no. Yes will calculate your performance, no will not. Now, when you run your estimate, it's going to need the P&L. Now, how do you get the P&L into the system for the estimate? There's a lot of different ways you can do it. The first is you can book it directly into the system. Penny will take anything booked, through a journal entry, through a trial balance import, and incorporate that into the estimate. But a lot of times you don't want to do real entries into the system. You just have a number you need to plug in for estimate purposes. So you have several different options. On this main tab, you have period to date. This is your period to date return, either as a percent or as gross income. So here I have typed in $150,000. This is telling the system for this period 4/1 to 4/15, use $150,000 as my P&L. You also have the option of incremental. What incremental does is adds on in addition to any journal entries you have in the system. So you can actually use a combination of real entries booked through the general ledger and the estimated screen as well. As if that's not enough options, you can actually take it a step further. And in some cases, you might not just have one number of estimated income, but that number might be comprised of several different numbers. If you go to the support tab, here's where you can enter in a description and an amount. So let's say instead of the $150,000, it's comprised of 3 different amounts. It will total it up and use that total on your main tab. So you can add it in as one number, or you can break down into detail. Once you hit save, the estimate will generate. And I have these already done up, so I'm not going to hit save, but I'll just show you. So now we have an estimate in the system. What does that mean? Well, it means we can run reports as if it was a real close. So for example, you can look at a partner capital report from 4/1 to 4/15. And this is a partner capital report just like if you had processed a real close. It's going to show you all your investors. It's going to show you your prior balance. Here's your P&L. Here's the $150 that we put into our estimate. It's also going to calculate your fees. And again, everything is based off of as if it was a real close. So it's going to look to your investor rolls. It's going to charge the fees set up however your fund is done. You'll have your accrued incentive fee. Note that it does mention it's an estimate. It gives you the dates 4/1 to 4/15, and that it's an estimate. It also gives you the date the estimate was calculated on. Now, I mentioned here it calculates management fees. But this estimate, this isn't 4/1 to 4/30, it's 4/1 to 4/15. What the system will do is actually prorate your fees for the time frame of your estimate. So let's take a look at that. So for example, if we look at a management fee calc report, here it tells you 4/1 to 4/15. It tells you it's an estimate. And you'll notice on the calculation, 15 days. So this estimate is from 4/1 to 4/15, and it's only going to use the 15 days for your fee calculation. So it will prorate your fees. So this is great for a single period estimate, but there are times when you have to go out an additional month. So let's say it's now, mid-May. You need an estimate for May, but you haven't closed your books for April yet. So again, as I mentioned, you always need starting your opening capital process as the base for your estimate, but how do you get an estimate for May if your opening capital for May is not processed. What you can do is run the multi-period estimate. Multi-period allows you to go out additional periods, and it still will work off of the base of when you calculated your opening capital. So in this case, we're still working off of our base of 4/1, but we're going to go out to May 15th. And what this tells the system is we're going to do a close for 4/30. We're going to process 5/1 opening capital, including any transactions you have booked in the system, and do an estimate for 5/15. And again, this is great when you haven't closed your books for the end of the month, but you have to start generating estimates for the next month. So just to look at a report, if we look, for example, the investor capital report, now 5/1 to 5/15. Now remember, we only have 4/1 processed for real. Yet now we can run a report for May, and here I have a contribution booked in, and it's going to take in any capital changes for May 1st and incorporate that into the estimate. Now, there are times when one estimate just won't do. Sometimes you have an estimate and then a revised estimate and then even an additional revised estimate. The system is set up. It can handle multiple estimates for the same date. That is a setting under the environment setting in the admin tab. Multiple estimate limit. You can limit it to just one, or you can allow multiple. When you allow multiple estimates, it allows you to put a short description in, and this helps you to keep track of which estimate is what. The system will always default to use the most recent estimate. However, for example, I have 2 estimates in the system for 4/15. Now, you only show one here because I have the filter set for reporting reportable. If I do all estimates, it's going to show, hey, I have 2 estimates here for April 15th. And it's just taking the second one as the status for reporting because that is my more recent estimate. So the system does allow multiple estimates on the same date, and it doesn't just override it. It does keep it so that you can look back and compare estimates. Now, when you close the period for real, it will take the real numbers on report. It will always default to the actual real numbers on a close. However, your estimate is not overwritten. It's still there. And what you can do is there's a status button. And for report status, you can select supersede, which means the estimate will appear even if the period is closed. So you can, after you close your period, all of your reports are going to default to run with the real numbers, but you can go back if you want to look at what your estimate was and rerun your reports by changing the status of the estimate to supersede. Another functionality we have with estimates is an estimate, a consolidation. This is especially handy if you have master feeder set up. As you know, Penny can do master feeders, and it creates the automatic flow-through journal entry. So, for example, if you have your master set up to push, when you close your master fund, it's going to generate a journal entry booked at the feeder. Well, by setting up a consolidation for your master and feeder, you can actually do one estimate for your master and have it automatically flow to your feeder and estimate at your feeder. And that's done through the setting up an a consolidation, and then you choose your consolidation. It's going to put the fund, for example, I have a master fund and a feeder fund. So if I put P&L in for my master fund and I run my estimate, it's going to estimate the master fund, create an estimated flow-through journal entry for the feeder fund, and then run the estimate for the feeder fund. So you can get estimates for both funds through one estimate. Now, getting into a little bit more detail, when you're doing estimates mid-month, I talked about the proration of fees and how many days to use when you're doing an estimate. We also have what's called a holiday calendar. And what you can do is set up a holiday calendar where you specify what days are holidays. You can also specify whether weekends are considered holidays. And what this does is, if you tag a holiday calendar to a fund, when you run an estimate, say you run the estimate and it's through Friday, it's going to include 2 additional days for your fee calculation to include the weekend. If you don't use a holiday calendar, it's going to take whatever, if you do the estimate as of the 15th of the month, it's going to use 15 days. However, if you use the holiday calendar, you can include holidays and or weekends in your fee calculation. And again, that's more of a timing issue for mid-month estimates, but that flexibility is there. So I'm just going to take a minute and see if any questions have come in, so bear with me for 1 second. Okay, so I have a couple here. One of them was, can Penny do special allocations for an estimate? Yes, as I mentioned, all the functionality for a real close is included when you do your estimate. The only thing you'll need to do with special allocations is you'll have to have the special allocation already set up, both the allocation default and override. And you will need to make sure your P&L is booked through a journal entry, because you need to specify the account and the sub-account. So any income that you need specially allocated, you should not do through the estimate screen, but rather through a journal entry. But yes, when you run the estimate, it will take in any special allocation set up. Okay, I got another one here. Oh, this is good. When you, let's see, the support tab. Okay, so one of the questions that came up was, if you noticed on the support tab, and this is the example I had, there was descriptions already populated. When you normally do an estimate in Penny, these are blank, and you have to type them in on your own. If by chance you are using the same descriptions for all of your estimates, you can skip a step and set up for these to automatically populate. And that is through the fund setup, estimate support details. So here you can put in the details behind your estimate, and whatever you use on this setup will flow through, so when you book your estimate, you're not typing the same thing in over and over again. So that's just a way to make life a little easier. Okay, and then, let's see what, okay, here's a good one. What reports run with estimated data? So there are a number of reports that run. The best place, and I'm going to show everybody, everything I've covered today is written up in our help file. And again, to go to the help file, if you press F1 on any topic, it's going to bring you, so here's the help file for estimate single period. So we have help files for everything that I've covered. We also have, if you go under contents, we have a section for accounting concepts. So if you go into the fund concepts, which is where the estimates are, there's estimated periods. This gives you a little bit more detail about the process. And this will also list out all the reports that you can use estimates with. So you have estimated income statement, you have the incentive fee calc reports, management fee calc reports, partners capital, shareholder capital. So all the reports are listed out here. And just one thing to note there, it did say like estimated income statement. If you go to run a regular income statement, nothing's going to show. You have to, if you want to do an income statement, there are reports specific to estimates. So for example, estimated income statement. So if we run, let's say for the estimate for 430, this will give you your estimated income statement. So that's just something to note. You have to use this report as opposed to the regular income statement. So that pretty much sums up the estimate functionality in the system. If you have any additional questions, or if I didn't get to your questions today, I will be reaching out later this afternoon. And again, any other questions, please reach out to me directly, kquaid@pennyatworks.com. And again, please see the help file. It's really good. It has a lot of the detail behind what I talked about today. And any questions, please let me know. And hopefully you'll join us again. We're going to be doing another webinar next month on performance and covering that topic. If you have not RSVP'd, just shoot me an email and I will add you to my list. So thank you very much. Again, any questions, please reach out to me directly or to crc@pennyatworks.com. Thank you very much. Bye.